Here with our trades, Courtney Garcia. Courtney, what's your take on Netflix?
Yeah, Netflix, I would actually be a seller on here. I think it's probably a time to take some profits off the table. It's doing fantastic today. Last time I looked, it was up about 9% off of this really great news. They had about 5 million subscribers already to their ad-supported tier, which is great. But realistically, they are going to continue to face increased competition, and they're going to have to continue to have those high costs in order to create new content to keep their current subscribers, let alone get new ones. And ultimately, this is a company that's seeing slowing growth. They had revenue growth about 6.5% last year, which is the slowest ever. And it is not trading cheap by any means at 33 times next year's earnings. So you're essentially paying a premium for a slower growing company, which I don't think is a recipe for success. So it's doing fantastic, but maybe time to take some profits.
Big surge today. What about Baba? Baba Black Sheep. They're going to do the cloud spin out. They just think they're not getting any credit.
Bye-bye, Baba.
Yeah, not giving a lot of credit at all, which actually the opposite is happening here. Where stock is down today, I think it's a wonderful buying opportunity to take advantage of. And really, they have continued to suffer where the Chinese economy has not opened as fast as everybody expected it to. And that has really been a headwind for them. But I think that is going to likely turn into a tailwind, especially when you look at later this or early next. And none of that optimism has been priced in. And I would not discount the Chinese economy eventually recovering here. And I think they're going to be a beneficiary of that. This is a company that's trading at essentially dirt cheap valuations, and they have about $55 billion on their balance sheet, which also puts a lot of room for them to invest in AI, which they brought out. Add on top of that, they're spinning off some of their businesses, which I think is a great long-term story. So this is definitely something I would look at as an opportunity.
Courtney says, bye-bye, Baba. I like it. All right, finally, Take-Two Interactive. Shares are up big, 52-week highs on earnings beat. The video gaming company shared a weaker than expected outlook, however, but signaled a strong future gaming slate. What do you think about this one, Take-Two?
Yeah, this also is doing really good on some excitement over their earnings. So we saw that both PC and gaming sales really actually did a lot better than people expected. And their mobile advertising was up about 2% quarter over quarter, which is great news. But I think this is excitement over the recent earnings that just came out. But even though they did beat on their earnings, they are still trading their earnings really are still deeply negative. And I think essentially you're going to see some of this excitement go away, and Wall Street will eventually focus on their return to profitability, which isn't expected till at least 2025 fiscal year at the earliest. And I just don't think that that's really what you want to be jumping into at the moment. So I would actually avoid this for the time being.
All right. Very clear. Good case. Courtney, thank you very much. Courtney Garcia, Payne Capital Management.